Hey everyone, Mr. Anderson here, and we're going to be going over Solana's latest price action. I have the daily up right now and the simple moving averages. As you can see, we are below the 20 and the 50-day moving average, but we are rejecting off the 100-day here in purple. So that is a good sign over this last few days of dumping. But we do have some reasons why we could come down lower, and I would see that latest price being around the $98 level. For one, we have an area of consolidation, which is now an area of demand. And we also have the 200-day simple moving average basically in confluence with that uh, price target of about $100, $98 to $100. So that's something that we need to be thinking about. And the reasons why we could get down to that level would be potentially fundamental. And it also depends on what's going on with Bitcoin and the ETFs. The SEC, there's been some issues with the DTCC as far as, I think, being able to take a loan out on an asset that is crypto. But that's something you could probably read up on your own. So when I put on my drawings here, we have several layers of supply and demand. And we also have what looks like a inverse cup and handle. Now, when you're identifying patterns, you need to have some additional indicators to give that pattern some credit. And I will tell you that our normal cup and handles to the upside, where we're bullish, have not panned out, especially for the lower or lightly traded cryptos. Now, Solana is a top 10 crypto, so it's very worrying that this pattern did generate. However, it does look like we have a candle that has jumped out of it, and this is not a science, this is more of an art, so I don't know how this handle is going to form. It could form a little larger and be a little more ugly, but it's something that we need to be cognizant about. Now, if we're going to predict the potential price target of this cup and handle, it could be from the trough to the end of the cup. And worst case scenario, we're going to come down in confluence with this area of demand, which is about $76 to $72. So this is worst case scenario. This is where the potential energy of the chart is. So just be cognizant of that. If you have a spot bag and you have some cash available, maybe you want to put some limit orders at the 90, 100 level, 101 level, and another at around the 76 to 70 level. This is just worst case scenario on the daily chart. As we add some of our other indicators, we will add our fib chart just to give us extra confluence of what's going on here. And that would kind of make sense. We have retested the golden pocket, so we've come deep into the retracement zone where we'd be potentially making a reversal and a buy, or a dollar cost average. And we punched that with one wick down here, and we got rejected, came back down, rejected again, and we have momentum down again. And depending on the next few days, we may come down lower. And if that's the case, then we need to be prepared for us to drop even lower. If we break that golden pocket, we're gonna have to go to our demand zones. So that's something to think about as we move. I'm gonna just get rid of these patterns off of here and go on to the 4-hour. Looking at the 4-hour, we basically have more of the same. We can check our stochastics and oscillators. We've had some pretty good momentum to the upside with our stochastic RSI. Money flow is still low and has gone down over the last 4 hours. And we have been oversold, but we're now testing the mid-range 50 on the RSI. Looking at the MACD, we're finally printing a green candle on the histogram, and we have some divergence here with the MACD lines, and we should get some upside here potentially in the next few hours. That might be sustained, and if it's not, it's probably going to be consolidation around this level between these localized point of control at 143 and off of this demand area, which is around in the low 130s. But what potentially could happen here is we get a double bottom and we continue to the upside. Now we don't have a lot of volume. This has been on decreasing volume. So, and we're on a weekend. There's not a lot of trading going on. Although we have large exchanges and entities moving money around when they feel like it, which could be a possibility on a Sunday. But right now, there's not a lot going on. I expect consolidation between 127 and 160 over the next 24 to 48 hours until we get our Monday open and the traditional markets start trading again. Now, looking at the 1 hour, I'm going to get rid of our I'm going to add our exponential moving averages, get rid of our multiple simple moving averages, add our Ichimoku. And see what's going on here. So I'll tell you the good thing is on the 1 hour, we have breached to the upside on the Ichimoku cloud. Lagging span is coming out of price action, which is bullish. And the let's see here. MFI, or the money flow on MicroCipher, is green. So that's a positive sign. It looks like we're having a change in direction, but we need to get above this localized point of control at about 140. And we have what is a mini cup and handle. Now, if cup and handles have been going the way they have been going, we're probably going to come down, reject off this cloud, and then continue up. That's just seems to be what has been currently happening with the cup and handle pattern in the crypto world recently. So if I had to predict what's going to happen in the next few hours, we're probably going to print a red dot here, come back down, retest off of this cloud, and then continue to the upside. As far as momentum, we got the RSI and money flow and the stochastic all positive momentum to the upside. And that is in confluence with the MACD. So this might be a potentially good area to make a buy. And I would probably make that buy around here. Set the stop at about that bottom, which is 137. And do a 1 to 1.5 risk to reward ratio. That's just going off of the momentum of the stochastic RSI and MFI on the 1 hour. However, if I was to do it my way, I'd get rid of the Ichimoku and I would probably wait. And the reason is because the 100-day exponential moving average is above the 50-day moving average. And what I would really like to do is to see that that has changed and we get a golden cross. And that would give you another confirming factor to take along. We probably retest the 50-day moving average and then continue up. So I think we're in a reversal at the moment, but we have to be aware that this price action over the last 24 hours has been on decreasing volume. So it's probably not a good time to make a trade, but if you were to look at the converting factors with what we have right now on a weekend, that's probably what you could do. So appreciate you taking the time to watch my video. If you have any questions or have a crypto you'd like me to look at, let me know, and I'll do some analysis on it. Thanks. Good night.